this is Dan Frio, and welcome to Education Series number 5. We're going to go over loan estimates today. What is a loan estimate? Actually, it breaks down all the numbers on the loan that you're applying for. This is probably the best way to compare mortgage choices. So when you shop around for a mortgage, what are you looking for? The one thing is you want a good rate. But don't be completely wowed on the rate, and I'll go through it with you shortly. So again, if you're shopping, what you want to do is get a loan estimate so you can compare these things that we're going to go over. So let's get started. First of all, here it is, the loan estimate. That's what we call it, or we reference it as an LE. It's going to give you the term of the loan. In this case, it is a 30-year loan. It's a refinance, so it would be a refinance or a purchase. It is a fixed rate. Make sure if you're looking for a fixed rate, it says fixed rate. Then it'll give you the type of loan that you have, and that's right here. Down through here is the loan amount. So again, make sure it's the loan amount that you requested, the interest rate, and what that mortgage payment would be, principal and interest. This does not include taxes and insurance. If you wanted that, it's going to be down in this section. So this has no prepayment penalty. Make sure there is no prepayment penalty. Make sure there is no balloon. Go down here. This number here equates out to this number here. That is your loan payment, plus you're going to escrow your taxes and your homeowner's insurance. Those come to $550 a month. That gets added up here. This is what your payment is going to be. That is your complete payment, principal, interest, taxes, and insurance. Now let's get down to the juicy stuff. Estimated closing costs. This can be deceptive, so kind of watch this, and I'll go over more details in page 2. Estimated cash you're going to need at the closing. So that's how much you're going to have to bring to closing. So let's get down. This is page 2. This really breaks it down into detail. Here's your loan costs. This is origination charges. You're going to see points, fees, discount fees, and things like that up in this section. You really want that to be blank. Down in this section, it's going to go through appraisal. You're most likely 99% of the time you're going to need an appraisal. So this is going to break down the costs of the loan, such as appraisal, credit report, flood service, and tax service fees. Those are very common costs. So if it varies a little bit here, don't be worried, but most of the time you're going to have these costs involved. These are your title fees. That is the legal part of this equation. And if you're comparing, again, different programs and packages, this is probably going to be comparable. It might not be comparable. So you want to check out that as well. Up through here, this is the recording fee of the deed that you sign. So that's going to be standard. This should be standard as well. Your prepaids, what that is from the day of closing through the end of that month. It'll give you that many days, and that's your interest per day. So you'll have that. This is going to be identically the same with any lender you go through. It should be. It's basically saying here's your tax, monthly real estate tax amount. Here's your monthly homeowner's insurance amount. To set up an escrow, this is what's needed. The tough thing is when it's breaking it down, it's actually treating this portion here as a cost. It is truly not a cost. You do not have to escrow. In some programs, others you do, but it is your money set aside. So for example, if you take out this loan and you hit the lottery and you pay it off in 3 or 4 days or 2-3 weeks, you're going to get all that money back. So then you go down through here. Here's one big thing you want to look for. This is a lender credit. That is actually, think of it as a rebate check from the lender to help you cover costs. So you're getting a $2,000 rebate here. That's what really driving down these costs. So that's how you're getting the estimated cash to close of only $600. But again, please watch, because when it gives you this number here of 2603, it is including your real estate taxes in there, or the escrow setup, so that's a little bit deceiving. Then you go to page 3, the last and final page. You're going to have an APR. This is a huge number to look at. So this, again, I'm going to hit the checkpoints, what I want you to look at when you're comparing things. You want to make sure you have a fixed rate, if you're looking for a fixed rate, and the term is correctly. The rate that you're going to get, if you have prepayments or balloons. You can actually skip this section here, go to here. You really want this section to be 0. These as minimum as you can. And you're really wanting to check out a lender credit. If they're not giving one, ask them for one. And then your APR. Those are the biggest highlights of a loan estimate. And this is how you compare lender versus lender, and don't be surprised if you compare two of them or three of them, and the difference is $1, $2, $3, up to $5,000. Yep, $5,000. So I hope you find this informative. If I can be of any help, let me know. Otherwise, subscribe below and stay tuned for educational video number 6 coming out next week. Take care. Thanks a lot.